This is the first day in well over a month that Tesla stock has been up over 1%. In fact, Tesla, you gotta pinch me or something, is up 4.19% today, up another 0.25% here in after hours. So maybe after all, our bullish prediction on Sunday might actually come true. I think it depends largely on what the number is tomorrow for Tesla. That mysterious number we'll talk about here in this video. Also helping Tesla stock to rally here in after hours is your AI names. Semiconductors are up big time following SMCI's earnings. But don't let me forget, the economic data coming out tomorrow will also be important. We do have a couple earnings as well that could be important for our market, specifically for Tesla when GM reports their earnings tomorrow morning. We will get into all of that and much more in this video, so let's get started. We are going to go ahead and kick this video off with something I did not mention in the intro, but it's extremely exciting, extremely bullish. I made a trade on this information. Don't recommend that you do, but the writing's on the wall here. Hopefully you noticed today at about 3 p.m. sharp, markets took a big move higher. I mean, it's a notable move higher towards the end of the day. Same thing happened in the Treasury market. Treasuries also took a big move higher at precisely the same time stocks did. That was not for no reason. And let's be honest, you can't make this up even if you wanted to. 9 hours ago, this article from Bloomberg was posted. Get this. U.S. Treasury seen boosting long-term debt sales one last time. At that same moment, Jamie Dimon says, JP Morgan's longtime CEO, says Washington faces a global market rebellion over record U.S. debt. It is a cliff. We're going 60 miles per hour towards it. So here you are at 3:01 p.m. today. The U.S. Treasury said in October through December of 2023, so last quarter, they borrowed $776 billion. They ended the period with a cash balance of $769 billion. Well, I'll be damned. This is the first time in a long time you're probably ever going to see a headline like this. The U.S. Treasury says they expect to borrow $760 billion in January through March of 2024. So the period Q1 that we are in right now, down $55 billion from the October estimate. But this is not what necessarily caused bond yields to fall today and stocks to, well, rip higher. It was this. The U.S. Treasury expects to borrow $202 billion in Q2, the quarter of April through June, assuming they end June with a cash balance of $750 billion. So let's get this straight. The Fed has been selling $700+ billion worth of bonds for multiple quarters in a row now. And well, for Q2, they're only going to sell $202 billion. That is bullish for bonds. Now, the bond market sounds a lot more complicated than it is. It works like a dividend stock. So the higher this chart is, the yield is fixed, by the way. So the higher the chart is, the more demand, the more people want to buy, let's say, a dividend stock. The lower the yield. Imagine it like this. If you had a $100 stock that paid you $5 a year, that is a 5% yielding dividend stock. Pretty simple math here. Well, if everyone wants to buy that dividend stock, and let's say it doubles, it goes to $200, but you still get paid $5 for your yearly dividend. Now it's a 2.5% yielding dividend stock at $200 per share. Same concept here. The higher this chart goes, the lower the yield. Thus, the lower the bond yield, the more demand there is to buy bonds. The lower this chart goes, the higher yields are. That's why banks are in a bad situation and all of that. It's because bond prices have fallen off of a cliff in recent years. This, for context, was the Rona. So bonds were like 150, 160. Now they're $94. They've gotten absolutely decimated. Well, what essentially this means, just to boil this down as simply as possible, if the Treasury is not going to be selling as many bonds, potentially that means the bonds themselves can start to recover without all of that selling pressure every single day, every single week. Bonds can actually start to perform well. Bond prices might start to rise. Now, think about this one. We're actually going to get the final numbers coming Wednesday, so we're going to know what they plan to do more definitively coming on Wednesday. What also happens on Wednesday, my friends? Fed Jerome Powell. Now, I have said here on this channel before today, like over the weekend, that I expected an end or dramatic reduction to quantitative easing coming on Wednesday. Not necessarily to start on Wednesday, but to be signaled to start around the next Fed meeting, which is on March 20th. I've discussed a couple times here on the channel by now why I think the Fed is going to stop quantitative tightening to go into more of an easing stance. Long story short, the Bank Term Funding Program was just announced on January 24th, 5 days ago. It was going to end on March 11th. Again, the Fed's not going to end that program, in which it looks vitally important to banks at this point, without bond prices going higher, meaning bond yields going lower. Coming on Wednesday, if the Fed does signal or outright just say that they are going to stop quantitative tightening, they are going to stop running off their balance sheet in the way that they have been, then the markets are instantly going to say, well, we should buy bonds. They're going to buy the bonds and yields are going to plummet. That's my personal expectation. I could be wrong, but I do think the writing's on the wall for this. I mean, not to mention, banks are literally running out of excess capital. Just so everyone knows, banks can do two things with customer deposits. They can give out loans, they can buy treasuries. So the overnight reverse repurchase agreement is basically a place where the banks to store excess deposits overnight because cash is a liability. And there's only $581 billion left in this fund. It's dropped from $2.3 trillion in May of 2023 down to $581 billion. So the Fed really doesn't have much of a choice to stop quantitative easing soon. Is that going to be this Wednesday they signal that to start or stop, I should say, in March? Or is it later in the year? Who knows? Eventually it's coming. I think it's sooner rather than later based on everything we've talked about in this video. And again, that's bullish for stocks like Tesla. I will also note Tesla stock is up well over 0.5% now here in after hours. Let me know what you think about this down below in the comment section. Next up, we have SMCI. This stock is either the most underlooked stock in recent times, going from $70 or so in 2022 to start 2023 to $541 here today. It's either the most underlooked stock in history or it's looking real bubbly right about now. Who knows? Doesn't matter. They just reported earnings. The stock's up 9.5% at the time of recording this video. Nvidia is up 1.25% based on SMCI's earnings. AMD, which does a lot of direct business with SMCI, is also up 0.5%. They are also sharing in the love from SMCI's earnings. So it looks like the AI hopium hype reality, who knows, continues and, well, doesn't look like it's stopping anytime soon. This is more than likely what is helping Tesla stock to rise about 0.5% here in after hours. What could also be boosting Tesla in after hours are the numbers that we're going to get out of China for weekly insurance registrations for last week. In about the next couple of hours, next 8 or 9 hours or so, we should get those numbers. And what I can assume based on what Tesla stock did today is those numbers are probably going to come in pretty strong. We have heard quite a few rumors from individuals based in China that have connects to Tesla that the next couple weeks worth of insurance registration numbers out of China could be very strong. Now, as I said in the last video, this is very important for Tesla because Tesla did not give official guidance. So if that number comes in strong tomorrow, Tesla probably going to have another 4 or 5% move higher. And I think the best part of all for those of you guys that were buying Tesla stock around 180 is I think that's a longer term bottom unless we go into a recession or unless Tesla continues to cut prices, which looks pretty unlikely at this moment in time. But even better than that, the RSI is still oversold following almost a 5% day today. The RSI is at 27.30. Anything under 30 is oversold. Normally, when you hit oversold, let alone go under 30, but normally when you just get to 30, you see a 30 to 45% bounce in Tesla stock. So this bounce could just be getting started in the reality of what we have seen in the past with Tesla. Normally, you see big bounces after big falls. Bottom line is, investors got way too pessimistic on Tesla, and I think that's going to prove to be a detriment, especially to the shorts. Oh my gosh, they thought they were a genius before today. Those buggers were shorting Tesla at 180. They don't look so smart now the stock's 192. And need I add, probably going even higher from here. As I said in the Sunday price prediction video, I think Tesla stock can easily hit 195 to 205 by the end of this week. That would be about an 11% move from where we were on Friday. Almost a 12% move if Tesla stock actually makes it to 205. Beyond that, we are going to be getting a lot of data coming out tonight. A matter of fact, France GDP data, Germany GDP data, and Italy GDP data. You are also going to get some data coming out for the UK as well, and then overall GDP growth rate year over year and quarter over quarter for the entire Euro region. Now, the Eurozone, if you will, if I can call it that, has been in a recession for a while now, like a defined recession. If you see better than expected numbers here, that could be good news for our markets as well. At the very least, Europe could have a good overnight trading session. That could mean we have a good session once Euro closes, which is around 11:30 in the morning. You could see that continue into U.S. markets coming tomorrow as well. Now, we do have some U.S. specific data tomorrow. The S&P Case-Shiller home price month over month and year over year. So month over month, you're expecting 0.2%. Year over year, you're expecting 5.9%. I think estimates are already high, so odds are you could probably come in on the low side. That would probably be some good news as well for markets. JOLTS job openings, that's going to be the big data coming out tomorrow. You're expecting 8.75 million job openings. Last month's number was 8.79 million. So you're actually only expecting to lose about 40,000 job openings. At this point, as inflation has fallen so much, it's probably better to see more job openings than to see a collapse in job openings. A collapse in job openings tomorrow, theoretically, if we were to see job openings fall by like 500,000 or 1 million, investors would say, if companies are no longer trying to hire 500,000 or 1 million people, that probably means their business is slowing down. That's like a Dollar General, just for an example. I think they're an easy target. Looking to hire 5 employees, okay, they have 5 job openings. If their business slows down and they're only looking to hire now 2 employees, now there's 3 job openings that are gone. That's not good for the economy. That's not a good leading indicator for economic activity. So that number will be big coming out tomorrow. You will also get CB consumer confidence expected at 115. That would be better than the 110.7 last month. JOLTS job quits expecting 3.45 million, and the Dallas Fed Services Index expecting that to come in at -8. The lower that thing is, probably the better. As well as that, tomorrow pre-market, you have Pfizer, GM, UPS, JetBlue, AC Smith, Marathon, MSCI, Corning, HCA Healthcare, and the Pulte Group. GM could be important if they have some really super negative things to say about the EV market. If they were to say some off-the-wall stuff like nobody's buying EVs, they all of a sudden just stopped. Something dramatic like that, it could move Tesla. But I think, as I said in the last video, markets are aware that GM and Tesla are in totally different stratospheres as far as EV penetration, their EV market. So what GM says is probably not too relatable to what Tesla may or may not be experiencing. Keep in mind, Tesla just did not provide guidance. That doesn't mean guidance would have came in low. They just didn't know what was reasonable for 2024. You don't want to set a guidance number and then utterly miss it. But the markets obviously went to the worst case scenario that Tesla's numbers were going to be in the poop chute for 2024, when in all reality, that may not be the case. That's why tomorrow's insurance registration number will be so important. Now, tomorrow and after hours is really where the fireworks start to fly. You're going to have Microsoft, AMD, Alphabet, Starbucks, Skyworks, Juniper, Match Group, Lending Club, EA, and CP. Now, Microsoft is arguably the most important company that will be reporting earnings this week. Microsoft has a Copilot AI system that was just launched in Q1 of 2023, so about a year ago now. Investors want to see some adoption there. They want to see some numbers from that program. And if that does not come through, if it's slower than expected, some of the AI air, if you will, could be taken out of our markets. AMD as well. If AMD kind of sours the mood, that could also be a problem. I'm not going to bet on that. I'm not going to go out on a limb and say that's going to happen, but it is a possibility. And then you have Google. Honestly, I don't have too many strong opinions there. Ad rates, pretty crappy to start 2024, the worst I've ever seen them, and I've heard multiple people talk about them as well. So I am feeling a little nervous about guidance coming from Google, but I'm sure Google's numbers themselves are going to be good, and I'm sure they'll try to talk up other parts of their business, even if YouTube is still on the weak side. Wednesday is mostly going to be about the Fed. Again, I already kind of went over that just because I think it's very important to go over multiple times so everyone fully understands. Wednesday, you will have a couple notable earnings like Qualcomm, Boeing's, Align, Novo Nordisk, and Phillips 66, as well as MasterCard, Thermo Fisher, and Boston Scientific. Thursday is going to be your next big day with Apple, Amazon, and Meta that will report earnings. And then Friday, you have some pharmaceutical names and Chevron and ExxonMobil. But overall, I think Microsoft, AMD, and Google, that's enough to get the overall picture of what earnings season is likely to look like. But tomorrow is definitely potentially a make it or break it moment for stocks like Microsoft. Microsoft chugging on almost every day, hitting a new all-time high. And these stocks, they are overbought on a dramatic level. Microsoft, it was only ever this overbought in 2019 for a brief period of time, hit an RSI of about 86, and that was following, what was this? A pretty parabolic rally, but a 4% rally the day following earnings, and then it kind of gave up quite a bit. You currently have an RSI of 78.78 heading into tomorrow's earnings. So you really need to see some kind of impressive number from Microsoft, or you're giving back some of the gain that you have seen recently. Option activity in Tesla stock today from hedge funds and institutions was exactly neutral with a positive order value of 50%. You had 962 different trades totaling $707.6 million. Let me know what you think about this information down below in the comment section. Specifically, how do you feel earnings will be tomorrow? Honestly, I'm on the fence about a lot of them. They've rallied so much, but there is plenty of reasons why stocks could continue. If you look at SMCI, I mean, that stocks went parabolic. It's up 70% before today's 9% move in after hours, before today's 4.5% move in regular trading. The stock is up huge since the start of 2024 with an RSI of 83. If this stock can go up another 9%, what's to stop Microsoft or AMD or any of the other stocks that report tomorrow's earnings? But again, are the numbers going to be strong enough? I think that's a big question. Are premiums too expensive? Do stocks just crash or rally? I think there's so many questions that need answers. In my investment lifetime, in my journey, things can be kind of simple to see, right? A stock rallies big into earnings, it's more likely to fall. But that's not exactly what you're seeing in our markets today. So long story short, let me know what you think about Microsoft, AMD, Google, Alphabet, and Starbucks earnings tomorrow, as well as some of these other guys. How do you think they are going to come out, and what are your expectations? Are these stocks going to rally, or are investors going to be somewhat disappointed? Let me know down below in the comment section. As for Tesla specifically, I think Tesla stock could rally big time from here throughout the rest of this week. Let me know what you think about Tesla as well. If you guys want to come trade with us, check out that link down below in the description of this video. Come join the trading community. Come get access to our earnings strategy that tends to work more times than not. It indeed did not work on SMCI at all. It seems like probably the market makers knew what direction that stock was going after earnings, but nonetheless, it normally does work pretty well. If you guys want to come join us, check that link out down below in the description of this video. Come ask us questions, come learn, come grow, come trade. It's a great tool for you guys to have among many other trading tools that you already likely use. Thank you for watching. Enjoy the rest of your day. My name is Michael Tyler, and I will see you in the next one.